Welcome back to the closing table. I'm Duffy Hanna, and today is an incredibly special moment for me because I get to sit down with two of my favorite people, and two people who shaped not only the company but helped shape me too, and the entire philosophy of how we serve our agents and clients. I'm here with a man who needs no introduction, my dad, Hoddy Hanna. Hi, Dad.
Good to be here, Duff, on your second show, the second podcast. I'm glad to be a guest, and especially glad to be with you two fellas, two of my favorite friends too.
and then my brother, the Chief Executive Officer, big title,
Oh, big
of
time.
Howard Hanna Real Estate Services, Hoby Hanna. Hey, Hob.
Hi, buddy. I'm glad I shaped you.
Yeah.
Yes.
Yeah, you're the older brother. Today we're going to go back to where it all started, the story behind Howard Hanna Mortgage Services, and the passion that built it, and nobody delivers the story better than the guy who was there from the very beginning. So, Dad, I want you to take us back to the moment that in the 1980s when it all began. What was Pittsburgh all about? What was the situation?
It's a great lead-in. Pittsburgh in 1980, 81, 82 was a dank period in our history. Inflation throughout the whole country was rampant. People talk about inflation today. Nothing like that. It was just everything was priced out of everywhere. We had mortgage rates that were up to 18% for a single family house. Just think about that. 18%.
People complain that 6% is too high.
Yeah.
It is amazing, In fact, I got a mortgage right after 81 and I paid 15.5%. It was still the best real estate deal I ever made on my own house, which I'm still in today. But
Still paying that rate?
well, fortunately, like most people, we refinanced 2 years
all right,
later,
okay.
and refinanced again, and now we're, no mortgage. So,
Okay.
so it's, but shouldn't put that in there. But
You and Bill Pulte.
We're live.
okay. But so I look back, and then we had the great decade, 3 years of Pittsburgh exodus. The steel mills were closing. Steel mills were almost all out of business. The steel industry shrunk in that 3-year period by 50%. Which means 50% of those U.S. Steel and J&L jobs were all gone.
People from Pittsburgh know what steel is.
Well, it's a hard surface metal product. They used to be made here all the time, here in Cleveland and Buffalo. It was, it was just a terrible time. Every day in June and July felt like it was January or February with the cold, snow, and gray. But every day was like that. It was just a tough time, and so. At that time, we did most of our business with savings and loans, because savings and loans were set up in the 1930s to lend money for people to buy single-family houses. Okay? Now, the problem is savings loans needed deposits to give the money out for a mortgage. And before 1980, you could drive past a savings loan. If the passbook rate was 4%, that meant the mortgage rate was 6%. If the passbook rate was 3%, the mortgage rate was 5%. Very simplified business. Well, when it's inflation, all these interest rates went up, people were chasing their money. Other investors were offering much better returns than a savings loan could, because they could lend money to other types of investment, commercial and industry. They can, to all walks of businesses, et cetera. So they could offer a lot more interest to their depositors. And so the savings loans at the same time were having outflow of their money, just like the outflow of the population. And they couldn't compete with the savings with the big banks, et cetera.
Mm-hmm. So there was a time, a period where you had a bunch of deals lined up and chaos ensued, right?
Yeah, you've heard the story, haven't you? But in 1981, in I believe February, March of 1981, we had 13 loans that were committed to close. We could not get a closing date from the savings loan, West Penn Federal Savings Loan in Wilkinsburg. We couldn't get a commitment date, couldn't get a closing date. And our barristers folks were all ready to close them, but we couldn't get a closing date because we had started barristers already. So we called the president of the savings loan and made an appointment with him on Wednesday morning at 10 o'clock. I remember it was like yesterday. And we went to his office, closed the door in his office, and we said, what are you going to do here, Marty? We got to get these loans closed. You've committed the loans to these buyers. These buyers are ready to move in. The sellers are looking to make a move someplace else and move on to other things. In fact, 12 of those people were going to use the proceeds from the sale of their house to buy another house. So we had 25 loans that were backed up at this one savings loan. So Foley quietly says, Mr. Hanna, Hoddy, I gotta let you know, we are totally insolvent, which means we have no money in the bank, no money to lend. You know, we're out of cash.
Mhm.
So we paused and we said, let's think about this. You know, so I wish I could do something, but I just don't have the money to lend to you. So we went out for lunch, my dad and I, and we came up with this scheme, plan.
Scheme?
It's plan.
Today's regulators might call
Yeah,
it
yeah.
that.
Well, we you know, for years, my dad would blame me for coming up with the idea, and I blame him because we weren't sure it was legal when we did it. You know, but we did it.
But you knew you had to do something.
We had to do something. So we went and collected from our piggy banks, from our little kids' piggy banks, from our savings accounts, from our lender, our lender for our real estate company. We got together $1,300,000, and that was the amount the loans would pay to pay off.
So did mom know that you were taken from her piggy bank?
Fortunately, she previous summer she got herself taken off the credit line. She wouldn't sign the credit line after 1980. No, you know, so she's that's another story. But so we put this $1.3 million all we could find, take it back out to the savings loan. Said, here's what we're going to do. We're going to give you a deposit for $1,300,000, but it's going to be called a pledge account, which means as soon as we put that deposit in there, you have to start closing these 13 loans. So we used our own money, took the greatest risk we've ever taken in life, because we didn't know if it would get solvent again. But the plan is we're going to lend out that $1.3 million, and we get to pull it back as soon as the money comes back in as deposits. Okay, so we were betting that people in Wilkinsburg would start putting their deposits back in there. But gave the $1.3 million, closed 13 loans, closed another 12 loans, closed 25 loans. Our agents were ecstatic because, I mean, can you imagine? But and that led us to say, and by the way, in the next 9 months we got the money back, the $1.3 million. But it was a great risk. But it was a turning point, I think, in the way we ran our business.
So basically, Howard Hanna Mortgage Services started because you literally bet the house.
We bet the house. I like that.
Mhm.
That's good. We bet the house. We did, huh?
But I would say that we've heard that story for years, and I always say that story. I'm glad that in your podcast we're sharing. We try to share it with the agents because you know the byproduct of, and you'll get into that, doing that once or twice with the savings loans led to starting our own mortgage brokerage firm and then mortgage bank and putting our own money to place, because we can be have the greatest sales team, which we do, and great marketing and innovation. But if we couldn't get financing to close deals, it's all for naught. But I think we also, it's part of that core value of why we have a mortgage company that only really supports the Howard Hanna transaction.
Right.
Because you did that, and in the inception of it was to support the Howard Hanna customers, the Howard Hanna agents, not the whole world, which is our products are geared for that. And at the same time, if I'm not mistaken, one of the things you guys took a little bit of a risk on as well is, because you had to put your money into it to get back, was that we made sure the agents got paid the commission. But we sort of, part of that 1.3 was our portion of the commissions,
Right.
the company dollar portion,
Right.
that we said, we'll get back and we'll bet on that. So you made sure all the agents got paid, the customers could close the houses, the customers can be serviced. So, and the family and the business said, you know, we'll figure out a way to, we'll bet on this, we'll bet on ourselves and it'll come back. So I think that's still in our DNA.
And that's where we came up with the mortgage company.
Yeah.
Because we said at the time, Helen was in the business, and Annie and my dad, and we said, you know, if we're going to be in residential real estate brokerage business, we have to control our own destiny with financing. And we can't depend upon some outsourcing of having the best mortgage plans available, mortgage money available, you know, creativity available. You know, we have to do that ourselves, and that's the reason why we started coming, because we felt we had to have a mortgage arm to be competitive and give our agents a competitive edge that virtually very few people in this country have, that any kind of mortgage company like ours. And you know, and it's not that we're running out of money today, but throughout the last 40 years we've come up with creative ways, innovative ways, for the mortgage company to do things other mortgage companies don't even know how to do. Other banks don't know how to do it. Or buy before you sell. I mean, like 15 is a new 20. So many different programs we could talk about all morning here. But it's just it is in our DNA to have our mortgage, title, insurance, our essential services as very much part and parcel of our realtor
Yeah.
experience.
And we talk about being built different, Hope, and it's like that. That's a huge example. I mean, we in 1981 they did this. Um, that's why they started the mortgage company, so that the agents could make commissions, so that the clients get into the homes. And so many companies 20 years later started a mortgage company, but not for the same reason, right?
No, not for a why. You always go back to what's the reason you did this because you want to make money. You did this because that's the end product. There was a true why to the structure and the culture of the mortgage company today. That we are a real estate company that owns a mortgage company.
Mhm.
And I mean, that 1981, obviously we were really little, so we don't remember it. It's a great story in detail, but part of that, having that part of our culture and our DNA of how we're built differently, it served us well. I mean, we can look as just this past year where, we created the buy, borrow, bundle program to not necessarily get more mortgages, but we did it to support our agents who are going to have to change with this new buyer agency law and this regulatory changes and legal changes to make it comfortable to say to a buyer, you've got to sign a contract with me and pay me a commission. But hey, if I can bundle this with you, I can create a savings for you. It was a crutch. We didn't say we'd do it forever, but it was a crutch. We have specific programs in markets, like a market like Cleveland or Pittsburgh or many of our markets where there's a lot of doctors and physicians. So we have our Physicians Plus program, a program geared towards getting those loans for those doctors, closing those deals quicker. The buy bar, but even I look at go back to 2009, not that far back in a financial crisis. And we're sitting there looking as a company, how are we going to grow? What are we going to do? And like a lot of real estate brokers could think about their advertising, their marketing, a lot of inventory we're selling. Well, as I recall, first thing we did is we went out to our banks and said, we're going to do more mortgages. We're going to sell more houses. So increase our line. So we bet the house on increasing our line to borrow more. We created that job loss guarantee mortgage.
And that was Annie Engel and Kevin Laird.
Kevin Laird and Annie Engel came to a meeting and said, we've got it. This will be the confidence builder, but you have to use our mortgage company. And we didn't have to pay a lot of mortgages because people didn't lose their jobs. But you go back to January of 2009, everybody was afraid of losing their job. The too big to fail wasn't a statement yet. President Obama was just elected. We were thinking everybody was going to fail, the bank crisis, the financial crisis. And because we have that mortgage company and we all know it, the senior team can sit there in a moment of challenge, in a moment of market crisis, and we say, what do we do to support our company to do this, whether it's from training, whether it's marketing, whether it's innovation or support? And we don't just think of it from a broker perspective. We've got the mortgage people at the table, the insurance people at the table, the title people at the table. This whole one company that's in the housing ecosystem is trying to solve for the problem, which at the end of the day is to help our customers buy and sell, and our agents service those customers. So.
That's why we refer to it as essential services, because everybody needs an insurance policy to close a house. Everybody who's smart, whether they pay cash or not, has to get a title. And for 90% of us, we need to get a mortgage, So all essential services to make that transaction happen for a real estate agent, for the consumer, the buyer, and the seller.
In that moment in 1981, became really a mission of the company. Really, make sure the deals close, support our agents, protect the client experience. And it was like even, Bop, when he was alive, he would come into the office, and he would. I love the story. He would come into to barristers or Howard Hanna Mortgage Services, and he'd grab some unsuspecting employee mortgage processor and say, "Who do you work for?" And they'd look up and say, "I work for you, Mr. Hanna." And he'd say, "No, you don't. You work for the agents and the customers." And it's really, still to this day, that's, I hope that's who we are and who we continue to be, is here for the agents and here for the customers.
Yeah, we used to have an advertising campaign. My picture on it, of course. And who do I work for? I'd say for the 1,000 real estate agents or whatever, because that has been, everything we do here is to help make the real estate agent more productive, help make the real estate agent have more products and services and ability for buyers and sellers that they're dealing with every day of the week.
Well, but that goes back to we're a real estate company that owns a mortgage company. I'm not disparaging any other lenders because there's great people out there, but when you work in our environment, because I mean, I sold real estate, you sold real estate, like you work as a loan officer here or somebody in the mortgage company, you're working Saturdays and Sundays because that's when we do deals.
Mm-hmm.
You're not 9 to 4. You better be available. You better be available at 7 o'clock at night. You better be available. And if there's a problem on the deal, how often we've all been called on the weekend, after hours, Friday at 6 o'clock because the deal didn't get closed today. And what are we going to do about it? Because it is Howard Hanna Mortgage. It is Howard Hanna Real Estate. It is our name. It is our family. We're standing behind it for the support of the clients who choose to work with us and the agents who choose to be with us.
Yeah. So shifting to today, I mean, you tell that story, and I think that has so many impacts and reasons for why we are where we are. But what do you want agents to know about Howard Hanna Mortgage Services from that story and where we are today?
Well, as we've sort of talked about a couple of different ways, the mortgage company, title company, insurance company is set up to support one person, and that is our realtors. Mm-hmm. We don't go out and try to sell our products to everybody else on the street. We don't hide behind a different name. Mm-hmm. Howard Hanna Mortgage is Howard Hanna Real Estate. And
that's right.
I think that I think you mentioned we're built differently, and I think it's one of the key reasons why we're built differently.
No, I echo that. You can't say it any better. That Howard Hanna Real Estate is Howard Hanna Mortgage. It's all one, and I do. I look at where we are today and where we are in the future. I think it is. I used to say it's our secret sauce. That we have this ability for this mortgage company to come up with creative programs. Really, it's our special sauce. It is the thing that when you look at competitors, somebody could have a joint venture with another mortgage company, but somebody else is making that decision at the table on how to support the real estate agent, the transaction. A lot of people are trying to figure out how to get into the mortgage business, or mortgage companies are trying to get into the real estate business.
That's right.
And we've been doing this since 1981. With a level of trust and a level of support, and with a mission at the end of the day that it is by a real estate company for real estate agents and for their clients. There isn't a hidden agenda. There isn't so every deal that comes through the door, we're bringing that back to our agents 5 years later. Yeah. We're bringing it back to our agents, to the Howard Hanna ecosystem. So you create customers for life, not just on the sale, but on the mortgage and on the title and on the insurance if possible.
Mm-hmm. Yeah. And I want all our agents to know who hopefully are listening to this, how deeply your loan officers care about you and your success. We all wake up every day thinking about you, how to support you, how to help you and your clients, how to make the process smoother. The alignment is rare. Most companies don't have it, but we do. And it's our greatest strength.
We like to say, we have one team and one dream. That one team working together, all facets of this company, to create the American dream of home ownership for buyers. And that home ownership means the agents are very much part of that team, as our mortgage people are, our title people, our closing people, our insurance people, marketing people. They're all one team working together for the dream.
So why this conversation and why now? Because the world around us is changing. Our brand is evolving. Our services are expanding. And the way we show up for our agents and for our clients has never mattered more. This podcast is one way we stay connected across real estate, mortgage, title, and insurance. It's how we keep the mission alive. It's how we continue what we started with one deal in the 1980s. Do what's right, support the agent, protect the client, and make home happen, no matter what the market throws our way. That is and always has been what makes us built different. Dad, Hoby, thank you for sharing this moment. I love you both and had a great time doing this.
Hope to be invited back.
Yeah.
Do I get to wear a sweater next time I come on?
Yeah.
Okay.
Mr. Rogers.